What's happening, guys? Welcome back to another Sunday scan. I hope that everyone had a great week and a weekend. Wow. Talk about volatility in the market. And for, traders who are used to volatility and everything, I mean, it's kind of a paradise where it's just, the range, the moves and everything can be, really, really great. But with the caveat that this is very different action than a lot of people are used to, especially people who are, maybe haven't been through as many market cycles, or people who are more long biased, or people who, just don't necessarily have strategies for this current type of action. And, trust me, I've been through many of these cycles, and I've been through cycles in previous times when I didn't have strategies for them. And I know how difficult this action can really be and how frustrating it can be, because for a lot of people, they find something in the market that has been working. They find a strategy, whether it's long, short, like whatever. They, do some back testing. They know that it works. They can find some consistency, and that's kind of like their go-to. And then you have a situation where the market just changes so drastically that that setup just no longer works. And it can be a very frustrating thing for someone to really come to grips with, that even though they're playing that strategy, as well as they ever have, even though they're using the same variables, they have the same, quote unquote, back testing that they've done, it's not working. And there's a reason for that, because in some markets, you can't back test for how certain variables are. And so, like, I'll mention this later on, because we're going to have Dawson on for the main watches, and he's just a fantastic example of someone who is able to adapt to these market cycles, these changes. He leans on people with experience. He brings it into his own trading, and he's able to really, just do very well in these types of markets and as they change. So he's going to share a bunch of market comments and main watches later on, but just something to really keep in mind is that. We talk about how I had a conversation with Tim Grattani, maybe a year or 2 years ago, and he was telling me about this algorithm that he built during 2020 and 2021 that had, this excellent long, strategy. It had all the key variables mapped out. It was back tested for, as far back as he could, kind of go. And then you had a 2022 come around, and the algo didn't work anymore. And so nothing changed except the market environment. And just goes to show that unless you are updating your strategies, unless you are recognizing that the market is different now, you cannot be stubborn. You cannot keep doing the same thing and expecting different results. And that's why adaptation is the most important skill that a trader can really have. Recognize what's going on. Find things that are working, find people who have been through market cycles where they've been able to experience this action before. And, they say that history, it doesn't repeat itself, but it rhymes. And that's the case with market cycles. That's the case with this type of action. And that's how you have someone, like Nate, who's been, super active in IU, just, calling out these pivot points, these turns, the action, the dip and rips, like everything. And it just seems like, for someone looking from the outside, it seems like, how is this possibly happening? How can someone have a read on the market like that? And it's because it's not the first time, that Nate or other, people, the moderators, it's not the first time that we've seen this type of action. We've been through many, many market cycles, and just like everyone else, you stumble through and you make a lot of mistakes, and kind of as long as you learn from those mistakes and you're able to adapt, that's how, you come back the next time around and you have strategies, what works, what to avoid. And, for a lot of people, the last market time that was kind of like this was like a 2022, where you have a ton of people coming to the market in 2020 and 2021. They all had strategies that were working, and then the Fed changed, and you had a 2022 cycle, and just, a lot of people, that was a super difficult time. Until you kind of, recognize the action, you learn how bear markets are, you learn how market corrections function, you learn how volatility impacts things, and then you're able to find a few things that work. And now the next time that you see a cycle like that, like now people are, can be much more prepared. So if this is your first market cycle where you've been going through something like this, don't worry. It's very natural and normal that you are supposed to feel a little bit frustrated. You're supposed to be a little bit more hands off. But the worst thing that can happen is that someone just refuses to adapt. They refuse to change, and they keep trying something that is not working. They keep doubling down on it. And that is just not a way to really have a career as a trader. But it's more about, leaning on people with experience, studying the action, finding things that are working, doing, and then being much more selective, hands off, much more defensive, taking profits when they're there, being extra risk averse, and just understanding, why are markets acting the way that they are? When did they have relief rallies and what causes those? So I'll go over just a couple of topics related to that to hopefully, get some people a little bit more context around, some of these moves that we've seen in the market. And then hopefully that will help kind of put some things into perspective. And so, I will touch on this a little bit later too, but for the last couple of years, really the key driving variable in this market has been the Mag 7 names. And so, the NVIDIAs, the Amazons, the Googles, it's like the big tech names carry so much of the market. And we talk about like the 80-20 rule in life, where it's like 20% of the results or 20% of the things are responsible for 80% of the results. And that's really what we saw with the market. So the Mag 7 names have been that, 20%, or it's obviously much less than that, but that small percentage that is driving such a large portion of the market moves in general. And when you have the Mag 7 names now not knowing what to do with, tariffs, you don't know how other countries are going to react. You don't know if supply chains have to get changed up. You don't know if there's going to be margin compression. You don't know if there's going to be an economic slowdown. And now the Mag 7 names have to cut back on CapEx, and that affects NVIDIA. And so it can affect earnings. And it's basically no one knows how it all plays out. This market reaction to the tariffs. People just don't know how to price that in. And when you don't know how to price it, you basically de-risk. And so a lot of fund managers, hedge funds and everything, they're de-risking equity positions because they're not able to really value the companies. They don't know what's going to happen. And so what tends to happen during these kinds of market cycles is that money on the net is flowing out of equities and it finds other places to go. Sometimes it's into the US dollar. Sometimes it's into bonds. Like you can see certain bonds have been bid. Sometimes it goes into different countries. And so money is always looking for a place to go. But when you have so much uncertainty, a lot of times it sells. It sells and it goes into something a little bit safer. Because again, all decisions have to be made on alternatives. And if stocks are too volatile, if they're being repriced, then that money is going to flow into bonds or into other areas. So obviously the U.S. Tariff news, and then the escalating trade wars. You now have China talking about doing retaliation, and it's just kind of this game of chicken where it's like, who's going to back down first, or do neither people or countries back down? And that can really be the big unknown, and that can be reflected in equity prices. So what tends to happen is that money flows out of equities, and as you have those super sharp corrections, what tends to happen is that you have people, start to short more, you have people pile into puts, and that all, kind of helps the situation to go down. And so you have these huge moves and these flushes until you get super overextended to the downside. And then what happens is that as the news gets worse, but the market stops going down, you get people off sides on the short side, and you have these massive swipes up. It clears out all the bearish positioning, or at least a lot of it, and you have those big rally backs. And those are like those bear market rallies where there's big, V-shaped recoveries that we've seen. And we saw one, a couple of weeks ago, how you had like about a 2-week period in the market where you had, a big swipe up, and a lot of people are like, oh, the first, leg down of this correction was it. And now, it's a V-shaped recovery, but you don't realize that it's really just positioning coming back off. And then after that kind of bear flag plays out, then you have the next leg down if news corresponds with it. And so you just have a huge reshuffle in equity markets. And, it's totally normal for a lot of people to just be caught off guard. But for people who have been through, a number of these cycles, you've kind of seen how this action plays out. You're able to identify the key areas, on the charts. You're able to identify the key drivers of the market, the breaking news, the positioning, the volatility, all those different things. And you're able to just kind of to piece together the puzzle. And then you can see, when you have the news change, or when you have certain positioning get too skewed one way, you have those resets. And so until the news changes, we are in like a market correction. We are in a bearish type of market. And I think that the NASDAQ even closed, down close to 20% from the highs. And so that is technically bear market territory. So some of these indices are actually falling into that now. So for people who haven't been through this, it's understandable to be frustrated, and it's understandable to be, a little bit confused by the action. But my best advice would be is to lean on people with, some experience. If anyone wants to reach out, if that you're coming across, you can always reach out to me at Chris@investorsunderground.com. You can email me and tell me what's going on, or you can always find me on X as well, Chris_J_Lance. And feel free to reach out if you have any questions, or if you want to talk about any kind of market concepts. I'm happy to do that, because trust me, I've been in those shoes before, where it's just a very frustrating cycle when you're not familiar with a market cycle. And so I can tell you that the people who stick around, those are the ones who have the right communities, the right experience. Those are the people who can end up becoming more professional level traders. But this is a normal process that everyone goes through. So if this is your first cycle, hang in there, lean on people with experience. And if you've gone through these cycles before, then hopefully you're sticking to kind of the bear market playbook, where you expect these sharp legs down, these sharp recoveries. You're being more defensive. You're focusing on risk. You're sizing down. And you're really just in the mode where you're trying to get through these times, capitalize on the volatility, which can be exceptional for people who know those spots to pick, and then being prepared for what's the next leg in the market on the eventual recovery, whether that's a year from now, whether it's a month from now, whether it's next week. So just want to put out a couple of notes on that, from someone who's been through a couple of market cycles in the past. Again, I started trading at the end of 2015, early 2016, and you just see so many different patterns and cycles repeat with, trade tensions, with elections, with political things, with market-related things, and you just you gather all these tools in your tool belt over time, and it really puts together like a bear market survival guide. So IU is a place where we're all coming together and coordinating to really navigate these types of markets. And for people who have been through these cycles and know what they're doing, it can be an exceptional time, and really a time to level up as well. So I'll bring on Dawson now. We will go through a bunch of market thoughts and examples. And again, Dawson is just a perfect example of someone who's been trading for several years and doing it well, but having not been through the same amount of market cycles, being able to lean on people with more experience, and just to see how he's adapted to this market. I mean, it's unbelievable. So let's bring on Dawson, and we will continue the chat. All right, we're happy to have Dawson back on Scan. Dawson, a Canadian, me, an American. We're in Tower Wars right now, but we're still going to have a great Scan. How you been?
Good. I'll Venmo you later.
Yeah, 25%, please. Yeah, so I wanted to have Dawson specifically on Scan this week, because Dawson is an incredible example of adapting strategy to new market cycles. And Dawson's been a great trader for a number of years, but maybe you haven't seen quite as many market cycles as someone like a Nate, or myself, who's been trading for close to a decade or so. And so as you kind of encounter these new market cycles, these market corrections, bear markets, these big changes, I think it's just really worthwhile to mention that being adaptable is the most important thing in trading. And it's one thing to kind of say that, but when the environment completely shifts and you have to change aspects of your strategy, you have to learn new things, you have to lean on people, and you can do that successfully. I think that is a huge win. So tell us about that process of adapting to this type of market. What's been working, what has been on your radar, and just kind of walk us through it.
Yeah, for sure. I think adaptability is one of those learned skills that does come over time, and it's going to be something that you encounter inevitably if you're trading for long enough. Market cycles change, certain setups that you're trading change. Whether it's back tested or not, it comes and goes, ebbs and flows. But I think that's where that network, we always preach network for traders for cause events or anything of that sort. And meeting those people, I think, is where the adaptability comes in for me. So for this past week was all right, but March, for the most part, it was a tough market for me. A lot of what I'm trading is multi-day runners, mean reversion on small caps for the most part. And a lot of the gappers we were having were one and dones, like either by open, closing at lows by close, or they were running for a day and then giving it back the next day. We didn't have like that sustained, whether it's like a sector momentum that catches legs, secondary moves, big picture breakouts. They weren't happening. And if they were few and far between. So it was kind of like out of practice by the time the next one would come around. I talk with Kyle Williams a bunch. We trade fairly similar small cap wise, and he had a bounce play in Tesla, and that was basically his entire month. Give or take the rest of it, his entire small cap strategy was break even for the month of March. But that's where the network comes in. It makes me feel like, okay, what I'm doing isn't working right now. Kyle, a seasoned trader, he's kind of in the same boat. We trade similarly, so there's something with the setups and patterns that we're trading that isn't working right now, and that's where that insanity conversation comes in. Of, am I just going to keep doing this and giving back money into the markets, or am I going to start to figure out what works? So Nate's built a great community over at IU, putting in new talent that it's not just Nate in there anymore. It never really was, but they weren't put on this pedestal to, hey, this guy's a good trader, this guy's a good trader, you can learn from these guys. So Ariel was one of those guys. Nick and Kaz has been having a really good time in this market as well. His style doesn't really vibe with me. All the entries, exits, scalping, all that kind of stuff. But I was watching a bunch of Ariel's stuff, and I'm like, he's trading big picture daily charts, but on a daily time frame, which is what I was doing in small cap. So can I kind of just make this into something that fits for me? So I started watching his interviews. He's put out some stuff on Twitter, and he's given some resources that he used. So I started watching a bunch of his stuff, and for the last week and a half, I've been a large cap trader. I've been trading a few small caps here and there, but most of the P&L was coming from large caps, trading similar setups to what I was trading in the small cap side, but finding an edge within that in large caps. And with the market volatility, then if you can get in where you fit in there, then it pays out pretty well.
Yeah, and that's a great example with Ariel, and he and I have talked a lot, over the last year, and we both had conversations about when 2022 came along and how, his process of developing a lot of those strategies that are working really well this cycle. It was because of the struggles that he encountered during 2022, where he was like, okay, if I'm mostly a long bias trader, if I'm mostly a swing trader, and then in 2022 comes around. Or even if he was trading small caps or other things, the market completely shifted. And he said, I need to learn from people who have been able to play, downside really well and learn how they think about it, learn their strategies, learn the charts, learn everything about it. And, by going through that process in 2022 for him, now when another market comes around where it's very erratic, very bear market like, he is now super prepared and has the strategies to do that, and now he shares those, and then people like yourself and a lot of others can now go through that same process. And then a couple of years down the road, when we have another market like this, you guys will be implementing all those strategies flawlessly, and then you'll be explaining it to other people who are kind of in the process of just kind of going through these cycles. And that's really what every trader does, whether it's a market correction or bear market, or whether it's a 2021, 2022, where maybe you had some people who were really good at playing downside on stocks. Then you have something like erratic exuberance, like 2021, you have a GameStop, and then it's adapting to those market cycles. And you brought up some of your conversations with like Kyle Williams, and then I've had good conversations with Tim Grittani about using strategies in different markets. And so, like, a lot of times as traders, people are, quote unquote, back testing a strategy. They're seeing how something works over a period of time, and you can try to back test it through different market cycles, but it's a really difficult thing to do. And with Tim Grittani, I think it was in 2020 or 2021, he developed a really cool algorithm that was doing exceptionally well on the long side, had all these key variables. It was, back tested through, that cycle and everything like that. And it was doing great. And then 2022 came around, and that exact same algorithm with the exact same inputs didn't work almost at all. And it just goes to show that, if a strategy is not working, it's not necessarily that you're playing that strategy wrong. It could just be the wrong strategy for that market. markets are dynamic, they change, environments change. And I know that when before we started filming, you were saying, like using the example of an episodic pivot can really influence a market where you have a storyline for the market, you have a narrative, and then something changes, and now it's a plot twist, and the market has to reprice that in. So could you just explain a little bit about what you meant by that, episodic pivot, and then how you see that actually playing out in the market right now?
Yeah, for sure. Like guys like Kulamagi and Stockby and stuff, they had referenced episodic pivots in terms of like an earnings day. Something with like huge volume that has now changed the trajectory of this company. And now you'd be looking for breakouts or breakdowns from there based on which way the trend changed. And in terms of SPY and the overall markets, we just had that with tariffs. This Other countries are retaliating, like China. Some of that news came out that they were putting tariffs back on the U.S. And then U.S. with their little poster board that was giving it country by country. So this is like a big picture news that the overall markets have reacted to very aggressively. So now there's a ton of volume coming in and a big trend change in like the weekly chart. So I'm a technical guy. I know news came out. I don't know a ton about the news itself. I'm not economist, but when I see news come out and then I see the chart start to tell its story, that's now a pivot. The most recent one in my memory was with Jensen and NVIDIA when they had that massive gap down a few months ago and all of the quantums got hit. That when he was saying it was like 20, 30 years out that anything was going to happen. Well, now these quantum names, something's changed in terms of like the chemical makeup of this company. It's not such like a dream that these things are going to take over the world. So now with SPY and this news, this is now some sort of episodic pivot that I'm seeing. And until something changes, stocks don't go straight up or straight down. There will be opportunity along the way. But bigger picture wise, I think we're months, years of it consolidating and choosing its next direction, whether that's continuing lower, starting to consolidate and build a base for the next decade of bull market. I don't know. But it's definitely a change, a shift, and it's something that needs to be noted. I think you would probably be better to answer a question of some other examples of episodic pivots and stuff in terms of overall markets.
Yeah, we see those a lot over time. And you mentioned a great one with like the quantum names, where when you have a sector or a set of circumstances and you have what I call a key driving variable, what is actually driving this move? And so like with the quantum names, that was all the hype around them and everything. And then you have like something like the NVIDIA CEO Jensen say quantum's not going to be useful for 20, 30 years. That basically takes that key driving variable and gets rid of it. And so to compare that to kind of what's happening now, if how many times have we heard over the last 3-5 years that like the mag 7 names, it's so concentrated, it's really driving the market, it's those are accounting for all the gains and everything like that. So that's kind of been like the key driving variable of this market, the mag 7 names. And now you have a situation where not only do you have the tariffs and everything like that, but now you don't know how the policy is going to respond from other countries. You don't know how it's going to play out. You don't know how it's going to affect the earnings. So if Apple doesn't know if they can get their supply chain move, you don't know if they're going to have 50% margin compression. You don't know. You can no longer rely on the Mag 7 names to drive the market. And so if all those things are being repriced and that key driving variable is now changed, that's what you're really seeing in the market, where what was driving the market, what was driving the narrative, that is all being repriced. Because people just don't know. And so, part of that bear market action that we're seeing now, a similar thing happened in 2022 when like that key driving variable was the Fed, where instead of, over the last couple of years in 2020, 2021, super easy Fed policy, a lot of stimulus and everything like that. Eventually, Powell, went out and made a speech and said that we're going to do whatever it takes to get inflation down. We're stopping the stimulus. We're going to do quantitative tightening. We're going to be raising rates. And, the market was like, wow, that is different. That's a whole different regime. And so that was an episodic pivot there. So, you have it during all these market cycles. It can be within sector moves, it can be the broader market as a whole. And so just really identifying what some of those key driving variables are, and then being open to, when those go back and forth. So for instance, we've had a huge sell off from that key driving variable of the Mag 7 names falling apart, tariff stuff, retaliation, people don't know how to price it. So they're basically reducing equity exposure. What if, next week they say, okay, we're going to drop all the tariffs and we're going to go back. Now that gets repriced back up, most likely. So it's just about knowing what is really driving the market. What is the key variable in the market? And then, understanding the news and the narrative around that. And that can lead to, huge flushes and huge rebounds. And so just kind of getting tuned in with that can really, really help traders.
Yep, you betcha.
Yeah, so let's get into some of the main watches. Before we do that, I'll give the disclaimer that neither of us are financial advisors, and these are not buy or sell recommendations. Everything that we talk about is for informational and educational purposes only. So Dawson, what do you have on watch for this week? I know that you have several names, and could you kind of describe the baskets that you're putting these names into?
Yeah, for sure. Everything is kind of market dependent, based if we're gapping down, gapping up, bouncing. So I've got baskets in terms of SPY and volatility products, VIX, and then I've got mean reversion ideas, multi-day pullbacks that is just max fear, capitulation, looking for those bounces. And then I've got other names that are remaining relatively weak, putting in a base, looking for big picture, multi-month, multi-year breakdowns. And then I've got a small cap basket as well.
Great. I will pull up those charts and we can walk through them.
Yeah, for sure. First off, I'd like to say usually we celebrate Stan's birthday on these, but this week we'll be celebrating Chris's birthday. So happy birthday, sir.
Thank you.
And next off, yeah, I'll talk about SPY here quickly. So you can see I've got the 50 moving average. It's trending up. We started changing the slope of it here as SPY was breaking some key levels looking left. And then we get this descending bear flag that's starting to fail to follow through. And now we're starting to hit some fear. And VIX is showing that with these daily chart speed ups. SPY and like VIX, for example, if you zoom out far enough, this is made to go to zero, as SPY is made to go to the moon. Just depending how far you zoom out, it's always at all-time highs, and VIX is always at all-time lows. So I like mean revert on each of those back to where they're magneted to stay. So VIX, any sort of gap up parabolics into some looking left levels. This was the August lows back in SPY, which were definitely in a different environment than this. But I'm looking for this to break down. Everybody who's thinking that this is possible, support. Volume is definitely coming in as we continue lower. Candles are getting bigger and bigger, as well as the gaps. I think this one was down like 6% by close on Friday. So looking for capitulation on both of those and some other mean revert names in that same market basket. Apple, it's a solid company. Yes, it's kind of rolling over and below moving averages. And I'm not looking to dip by these and hold them for new highs. That's not what I'm looking at. Stocks don't go straight up or straight down. They push, pull, consolidate, choose their next direction. So I'm thinking the faster and more aggressive that they pull back, they're going to have just some quick snapbacks to take advantage of along the way. We had like semiconductors getting hit as NVIDIA started making lower highs. You had MU, you had, was it AVGO? Was that it? Yeah, AVGO. A bunch of semiconductors that were starting to fail to follow through. MU just recently broke this 84, 85 base, and it went straight down to 65. This one doesn't typically trade this kind of range. So I'm just looking left, finding some other possible levels of interest, and looking to trade off of those. NVIDIA, SOXL is a semiconductor ETF. and you can see the volume starting to come in here down at lows, showing like fear is starting to come into this. And once you get max fear, that's typically when those reversals start. And then GE, this one was kind of shocking. I had traded this breakout on it back here. So now we're pulling back and coming in rather aggressively into this prior breakout level, prior resistance to possibly become support. So all market dependent on these. If we gap down and stay heavy again, none of these are going to bounce. They're going to continue to roll over. But if we do get that gap down, stabilize, hard crack, higher lows, starts to build dips versus VWAP, that sort of thing. Like Apple, I had tried, I traded the bounce on it a little bit on Friday over here. I was long here, VWAP dips, got stopped over here once it failed to follow through. And then we got that capitulation that starts to hold, but it didn't stay over VWAP, this yellow line here. It acted heavy and then rolled over the rest of the day. You'd want to see that capitulation start to build, re-break, retake prior highs, and start to build off of that. So yeah, mean reversion on those names. And then I've got these similar setups to Reddit. Trading like this 154 breakdown, you get that bear flag, fail to fall through. Another bear flag, 105s come into this gap fill of 80s. So you get that other breakdown. AVGO, I had traded that one. You had this hard crack, bear flag, 180s breakdown, and nice fail fall through. We had GRRR just recently. We had this higher low, little breakdown here through 23s, nice breakdown. So what we're getting now is a bunch of names that I'm looking to stay relatively weak. If markets start to bounce and these things don't and stay near their daily basis, then I will keep these ones on watch. So Dollar Tree, for example, if you zoom out, this thing dates back all the way to like 2014 levels off of 60. And it's now like on a much bigger time frame, a pullback from 105 down to 60 and consolidating in a much tighter range, 75 to 60. So this is like a big picture bear flag right on a multi-year base. So if this takes out 60, I think this could get hit really hard. It held it on Friday, but I'm going to be looking for this to stay relatively weak and look for that 60 breakdown. Hood broke down under this 35 level. It bounced intraday with the SPY and the rest of the names, but stayed under those 85s and is starting to roll over here in after hours. So as long as 35s acts as a top prior support to become resistance, I'd be looking to lean that. If markets start to rally, it reclaims 35, then it's just a hands-off trade for me. But as long as it stays heavy, I like the looks there. App, same setup as Reddit for me, where you get that breakdown. Same setup as Reddit for 105s. This one's starting to break through this 230 level right into this gap fill that goes down to like 170s. So there's definitely some meat on the bone here. Looking at the volume profile, you can see this little pocket in volume from the low twos to the high ones. So if this one stays heavy, I like that one for that little gap fill. Bear flag breakdown. It's staying heavy under these levels. So pops versus Friday's levels, and look for that one to fail to fall through. And then Palantir on Friday just took out that big 80 level. This higher low bear flag starting to break down. So see if this one stays relatively weak. So across these two baskets, I've got names that are breaking down. They haven't sped up yet, and they're just starting to break prior support. So if they continue to stay weak and maybe they're going to start to play some catch up, I'm going to be looking for pops versus those breakdown levels. And if we get gap downs and reversals, I'll trade the other basket. So whether we're bouncing or we're continuing to fade on Monday, I have two baskets that I'm prepared for to take either side of that trade. And then as far as small cap goes, I just got a couple names. These quantum names with QBTS has been staying really weak. IONQ just started breaking down under 20. If 20 starts to stay heavy, this one could roll over. Rigetti, this one's been staying relatively weak since this last pump job. So QBTS and Rigetti were the weakest of the bunch. And then Qubit was holding up a bit better than the peers, where it went on its multi-day run was actually holding up near its highs. It didn't give it back as quick, but we finally gave up that 730s level, and it acted as the top off the, oh, not 5 minute. It acted as the top off the open and then steady fail fall through. So I like pops on this name as long as 730s doesn't start to firm up. So pops up into these high sixes, low sevens, and look for that one to round trip with the rest of the basket. And then TCRT. This one here has been pushed by those messages, those message groups, same group as DWTX, GDHG, CRVO, the list goes on. But they had put this one out here midday a few days ago, went on a nice multi-day run, was looking for that capitulation trade. And if you look on like DWTX, once you get that multi-day run, closes red for the first time. This one had an offering in pre-market, but that's kind of that trend shift for it to fizzle out. CRVO had a few days where it goes on this multi-day run, pulls back, holds red, and then goes on another multi-day fade. So this is the same group running it. So I would expect it to act the same, where it goes from the ones to the fives to get that first day closing red. So any pops back up into yesterday's levels off of Friday, anything into this 3 to 4 range. I like pops for failed fall through. This should end back where it came from. There's no reason for it to be up other than the messages and retail buying it. So yeah, that's my list.
Excellent stuff, Dawson. I mean, really, you can just see the preparation and the thought process behind all of it. So, as always, super impressed by your watch list. So, great job there. I'm going to get into a couple of mine, and the first thing I really want to touch on, just very briefly, is the VIX, and that's what Dawson brought up as well. So, we've talked about this a lot over the last month or 2 months. I've kind of been talking about how VIX responds with bear market action, but I think it's worth noting that like the normal VIX, there's been a change in the market. So historically, VIX was like the go-to for volatility, and what it really does is it's measuring volatility or expected up volatility 30 days out. And so for the last like half century, that's kind of been like the benchmark for measuring volatility. But a couple of years ago, we switched to basically zero dated options, and that changed things where it's the volatility in the market doesn't just show up on the 30-day period. Now it's much more concentrated in the zero dated stuff. And so you can see implied volatility day to day. And that is why, for the most part, VIX has been a lot more muted recently. So when you get like these big, spikes or whatever, a lot of times the VIX is at much lower levels than it has been historically. And that's because these zero dated options basically take that hedging, role. But when you have longer term uncertainty come back in, that's when you have that 30-day VIX really start to spike again. And you can tell around episodic pivot points, then that's really when like the longer dated uncertainty or the implied volatility rises as well. So I just wanted to kind of bring that up because it's not talked about super often, but VIX is definitely a good thing to watch in this market, and you can see, the correlation with SPY as things are going nuts. So a couple names I have on watch for this week. The first one is Nike. And so basically, Nike was hit super hard by a lot of the tariff stuff. A lot of these companies, they make goods overseas. They use cheap labor. They have all these different things. And now you have all the tariffs basically threatening to compress margins. And so they need to adjust their supply chains. But with Nike, they have half of their production coming from Vietnam, and Vietnam was talking about making a tariff deal with the US, both of them possibly bringing their tariffs down to zero. And so it had to bounce on that. So I think that, with bear markets or with market corrections, the first thing that happens is that money leaves almost everything. The second thing that happens is it picks winners and losers. And so, once we've had a big flush in the market, I think you're going to start to see some pockets where some names have a little bit more strength than others. And I think Nike could potentially be one of those things. If you have like the companies that have supply chain, issues being sorted out, that could be one place where you get some relief in that. So Nike is on watch for me. And the same thing with Restoration Hardware. Again, you have these giant capitulation trades to the downside. They had earnings, they cited tariff risks, slowing growth, and then you can have huge multiple compressions there. And so Restoration Hardware is another name where if you have some of their supply chain kind of going back into a factor, possibly some tariff relief there, you could have some big bounces on these. And I have a very broad, picture on a lot of these names. So, people can go on their charts and draw key levels and you really zoom in. But, the bigger picture idea is, you could have some kind of big mean reversion, a bounce trade off of that. The next sector that I have is the China names. So I've been talking about this for a little while. How the China names, they run for a while. They can be good trades, but you can't really have them, in my opinion, as investments because the same variables that people look at with valuation, with market share, with all these things. That's like almost like a Warren Buffett style type of valuation. But there's a reason why Buffett himself doesn't really invest in the China names, is because they have an Achilles heel. They have fatal flaws, and that is that the government over there can do whatever they want to the companies, and the US can delist these. They can do basically whatever they want. So it's not the same formula that you're using it for, like a Berkshire Hathaway or for some of these other names where you can have huge amounts of cash on hand, good multiples, all these different things. It's like you can have a lot of these companies in China that mirror those, but they have fatal flaws that the US companies don't have. And that's why they can fall apart. Like we saw the China retaliation to the tariffs, and you have relative strength and everything until you have that headline fatal flaw. And now you can really see, I think, as long as those tensions stay up, a lot more unwind in the China names with Baba, with PDD. And I think that things could really escalate there. And again, one headline and it changes. Let's say they both drop the tariffs, it's right back up. But they have that key driving variable that you have to watch out for. And so Baba and PDD are both on watch for continued downside. In my opinion, if the trade tensions just kind of go, we're going to ramp it up, they get worse and worse, and you can't have a stable environment regardless of valuation or everything else. PLTR, crowded retail name. This has held up pretty well, but again, like Dawson was saying, you have these big kind of bear flags, these bases, and if they start to break down, you have so many people who have been perpetually buying every single dip on these throughout the entire run up, that if you get it below a certain level, you can have, a trend change. And then, there's been no capitulation in Palantir yet. So if you have, if this ends up being a big bear flag and you have a nice, capitulation down maybe to the 60 level or something like that, if the market stays weak, I think Palantir can have some continued downside. But that being said, the market's been down, close to 5% for multiple days in a row. In my opinion, you're probably closer to a big bounce. And so that's why some of the names like Nike or Restoration Hardware are on watch as well. So plan for two scenarios. NVIDIA, same kind of deal. Everyone has been crowded into NVIDIA for the last 2 years. And, all these trend changes, from every dip being bought to every pop being sold, you can just see that action. Last week on Scam, we talked about how I think that this could potentially, test that $100 area, and now we're well below that. And I think that, we're just going to be looking at levels going left to see how far this goes. Because again, if you have, earnings and all these assumptions that were priced in, and now the Mag 7 names don't even know what their margins are going to be, maybe they're not able to spend $80 billion on, the next round of chips. And so if they're pulling back on CapEx, then maybe that affects NVIDIA, or maybe if there's export controls or tariffs. There's so many uncertainties that, you might say that, oh, it's trading at 30 times earnings or whatever it is, but you don't know if earnings are going to go down by 30% or 50%. So now, that multiple, instead of getting better and better, could be getting worse and worse. And so that's another name to have on watch. You already talked about Apple, so I won't touch on that one again. Same kind of situation. People are saying they might have to raise the price of iPhones. They could have margin compression. You have all these fundamental variables that are now changing. And so that's been a huge loser in this market. And I think that Buffett's happy that he sold, 100 billion or so of that. And, he's sitting on a huge amount of cash. So again, talking about seeing a lot of market cycles, I think Buffett is, leading the pack there. MSTR, actually some relative strength, and along with Bitcoin. So Bitcoin usually falls apart anytime the market corrects. And part of that reason is that Bitcoin is usually a highly leveraged asset. And so as you have leverage come out of the market, usually Bitcoin just gets hit with that. But Bitcoin's been maintaining around those mid to low 80 levels. And MSTR, whether it's because it's super short crowded or whether it's because Bitcoin's holding up, for whatever the case, you're seeing, this hold up pretty well, a lot better than the Mag 7 name. So I think if we have a market bounce, if Bitcoin rips, MSTR will be on watch for upside. And then one of the last things I wanted to touch on was these banks. So over the last month, I've talked about how banks can go from looking really, really good to really, really bad during market corrections. And part of that is just that all that uncertainty, all the credit risk being repriced. As the Mag 7 names don't know what they're going to be earning. Neither do all the people that were, borrowing from banks and everything like that. So you don't know if those loans and all those things that looked good a month ago still look good, and that gets repriced. And you can just see these major unwinds in these banks. I mean, it's not good. It's not healthy when these banks go, they fall 50% in the course of a month when credit conditions change. So that's something where, risk can pick up. And another kind of a fatal flaw with banks as a business is that not only are they highly leveraged, but if the market gets bad enough, Congress can say you can't do dividends, you can't do buybacks, because they don't want to have to bail out the banks if things get super sketchy. So we saw that in COVID, and that's another thing with financials that are a unique risk to the banking sector. And then the last thing that I'll really touch on, well, I guess two things. TCTM, we've seen some swipes up. This has a ticker change coming, I believe, on Monday. So you could have some wildness there. It's actually held up pretty well in this market where a lot of other small caps have kind of been chopping around. And then TLT, you can see bonds. This is the 20-year bond. You can see as markets have been going down, some money has been going into US bonds, and that is expressed in TLT. So if you get a big bounce on the market, let's say you get some kind of relief rally in equities, you could have, bonds mean revert a little bit, because there's so many bonds that the government actually has to issue, or the Treasury has to issue this year, that I think that the natural state is bonds going down, but the fear in the market causes people to leave equities and to go into bonds. So that was a huge mouthful there. I will stop talking. Dawson, back over to you. Any thoughts, comments, questions on any of these names?
Yeah, in terms of the Warren Buffett comments, I wasn't as smart as he was, and I've got a long-term account that I plan to hold for many years, roll like day trading day trading gains into a long-term account. So I'm continuing to buy into these, but really long-term holds. Yeah, in terms of your comments with the banks, I had bought some long-term stuff back in like March 23 when those regionals started like defaulting and stuff, and there was like max fear in good banks, Bank of America, Citigroup, Wells Fargo, all those kinds of things, and we're coming back near those levels. So those things are getting hit pretty hard. I didn't even look at that sector, but as far as like mean reversion names go, I think we see eye to eye there. We don't know what's going to happen in the next few months. I think in the next 10 years, I think we're going to be just fine. But in terms of like day trading, which is typically what these watches are for, I think just take advantage of the opportunity. The volatility is here. So just take advantage of it. And if you're not good at it, then I don't think there's a problem with sitting out either.
Yeah, I totally echo that. And I always say that all decisions have to be made on alternatives. And if someone is trying to trade right now, but they don't have the strategies for that yet, it's better to sit on your hands and do nothing than to try to be active and to be losing money. So, IU and, being around traders that have been through these cycles before, that's a great place to, kind of understand these cycles, learn the strategies. And it's like, you pay market tuition either way. You either pay for education or you pay by trying to hack it on your own and then going through a market cycle where your account gets destroyed. So it's just something that every trader kind of goes through. And, a lot of people who might be a little bit, struggling right now, or people who are just a little bit lost, I always say that it's just a matter of sticking around for different cycles and to really, just focus on adapting, focus on learning. And, by the next cycle that comes around, you'll be much more experienced and you'll have, strategies and playbooks for those events rather than trying to, learn them on the fly. So it's something that everyone goes through, and just stick it out, and just know that it's within your ability to learn, to adapt, and, you can make it through the cycle. You just kind of have to stick with it.
Yes, sir. I like that.
Great. So Dawson, thank you so much for coming on and for sharing your watches. And you and I will be trading together in IU in the upcoming weeks. So I hope that you have a great rest of your weekend, and I'll see you in IU.
You bet. Have a good birthday weekend.
Thanks, man. Thank you, everyone, for watching. If you want to trade live alongside me and other members of the Investors Underground community, then check out investorsunderground.com to see if becoming a member is the right decision for you. They have some of the best technology and a lot of great members there, all looking to help other people improve their trading. And also check out Investors Underground content on YouTube and Twitter. Thank you.